President Donna.
Steve Liesman, CNBC. Every day it seems we look at the stock market, it goes up triple digits in the Dow Jones. To what extent are there concerns at the Federal Reserve about current market valuations, and do they now, or should they, do you think, if we keep going on this trajectory, should that animate monetary policy? Finally, maybe as a sign of what's been going on with valuations, this cryptocurrency called Bitcoin keeps going up every day. What is the policy of the central bank of the United States of the introduction, use, and incredible rise in popularity of Bitcoin?
Okay, so let me start, Steve, with the stock market generally. I mean, of course, the stock market has gone up a great deal this year, and we have, in recent months, characterized the general level of asset valuations as elevated. What that reflects is simply the assessment that looking at price-earnings ratios and comparable metrics for other assets other than equities, we see ratios that are in the high end of historical ranges, and so that's worth pointing out. But economists are not great at knowing what appropriate valuations are. We don't have a terrific record, and the fact that those valuations are high doesn't mean that they are necessarily overvalued. We are in I've mentioned this in my opening statement, and we've talked about this repeatedly, likely a low interest rate environment, lower than we've had in past decades, and if that turns out to be the case, that's a factor that supports higher valuations. We're enjoying solid economic growth with low inflation, and the risks in the global economy look more balanced than they have in many years. So I think what we need to and are trying to think through is if there were an adjustment in asset valuations or the stock market, what impact would that have on the economy, and would it provoke financial stability concerns? And I think when we look at other indicators of financial stability risks, there's nothing flashing red there, or possibly even orange. We have a much more resilient, stronger banking system, and we're not seeing some worrisome buildup in leverage or credit growth at excessive levels. So, this is something that the FOMC pays attention to, but if you ask me, is this a significant factor shaping monetary policy now? Well, it's on the list of risks. It's not a major factor. And then you asked about Bitcoin, and there I would simply say that Bitcoin at this time plays a very small role in the payment system. It is not a stable store of value, and it doesn't constitute legal tender. It is a highly speculative asset, and the Fed doesn't really play any regulatory role with respect to Bitcoin, other than assuring that banking organizations that we do supervise are attentive that they're appropriately managing any interactions they have with participants in that market, and appropriately monitoring anti-money laundering, Bank Secrecy Act responsibilities that they have.
Has there been a directive, has there been a directive about Bitcoin to the banks and their dealings with Bitcoin from the Federal Reserve?
I don't believe there's been anything specific about that. Just generally, banks have Bank Secrecy Act, anti-money laundering responsibilities, and this applies to Bitcoin as it does in every other realm.